Hey, this is Brent from TradeGuild.net, and it is the 18th of September 2008. I realized that a lot of people watch these videos pretty much exclusively on YouTube, and I have a lot of subscribers on there. Thank you for being a subscriber. But stop by the website because we have a lot of great stuff on the website. I just want to go over some things that I wrote on Monday, September 15th in a post. We are looking at the preamble of a financial meltdown that will shake the U.S. financial system to its very core. The plunge protection team should be heard from very soon indeed. Taxpayer money or not, this is a crisis the U.S. financial system hasn't seen in most people's lifetime. Is there a silver lining? Yes. And selling today on weakness, this was Monday, was a gamble I chose not to take. I still didn't sell on weakness the rest of the week. The overwhelming volume today, this is Monday, along with the VIX hitting 3187 up nearly 25%, also indicates an oversold condition in which it is not uncommon for the market to rally from that point or near that point. Still, from Monday, September 15th, if the waterfall scenario that I described below comes to pass, and if history repeats as it has so often in the past, the September meltdown that I described below may very well be the end of the bear market this October. As I mentioned, that's when bears tend to die. In today's market letter, I send out the letter for contributors. It was very short. It was one thing in the market letter. Here's what it was. This was a quote. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. That's a quote from Warren Buffett. So there was nothing but fear in the market the last 2 days. Today was a brilliant day to be greedy and to be a buyer. Okay, while everybody else is selling, while there's panic, while there's blood in the streets, it's a very simple, almost counterintuitive, I guess, thought, but it really, really works, and today that really paid off to be a buyer. Also in today's market letter, fear is in the air. The VIX hit levels not seen since 2002. This is a time to be looking at least being a short-term buyer. The September waterfall can still play out, but right now the VIX is running the show. In capital letters, there will be a rally. This is, I think, at 10 o'clock this morning. We already see it this AM. Whether this is it or not, it will be soon. So that's from today's market letter for contributors. So there's some good things on the site, and there's some great things in the market letter. And if you want to get involved, you can check out the site and learn about that. Anyway, carrot. So today there was a concerted effort by central banks in Europe and with the Fed today to infuse liquidity into the system. The Fed added about $180 billion to their dollar swap credit lines. Okay, so the Dow Jones 30, let's pull that up. I have it on the screen right now. We're looking at this morning is right here. And we had a pretty decent morning. And then we saw this sell-off over here into the afternoon. We not only retested lows, but we made new 52-week lows over here in the morning. And this is when it really paid to be a buyer. When others are fearful, we be greedy. Okay, so in the Dow Jones 30, I want to show you what happened as the Dow was falling. I'm going to put up a comparison symbol real quick, and this comparison symbol will be gold. I'll use GLD. While the Dow was falling, GLD in red, gold rose almost 9% today. You can see gold has an inverse relationship with the market. So when the market's strong, gold is weak. Generally speaking, when the market's weak, people seek to protect their assets by buying gold. So you can see as the market was selling off over here, gold was rallying up as much as 9% today. At midday today, the sell-off, basically what got this rally kicked off was the UK, Great Britain, prohibited or put in a short-term prohibition on short selling in financials, and at the same time the New York Attorney General is considering a proposal to ban short selling in financials. So let's pull up the XLF real quick. This is financials ETF. Let me get rid of gold there. So you can see this morning we actually got off to a pretty good start. We gapped up over here on XLF, sold off. I think this is where we're retesting lows. We sold off, and it's nice to see these sell-offs that break former lows. I like them because really what they do is they shake out all the weak hands, they shake out all the limit orders, and at that point we saw this big volume come in. This is about the time that the UK put in that ban on short selling in financials, and the New York Attorney General came out. Financials were down at this point as much as about 6%. They closed up today 11.7%. So a huge volatile day today. If we look at the volatility index, the VIX, which is the Chicago Board of Options, the Chicago Board of Options Volatility Index, which tracks volatility in options, you can see the VIX hit 42 on an intraday basis, which was huge. This is a multi-year high. If we look at a one-day chart, you can see just how high this actually was. So the VIX, what this indicates when you see readings that are very high up here is fear. Readings that are very low down here is complacency. And just like Warren Buffett said, when there's fear in the market, we want to be greedy. When there's complacency, we want to be fearful. And to illustrate that point, I'm going to put up a chart of the S&P 500. And we can see the inverse relationship that fear or the VIX has with the market. So just like Warren Buffett said, when we have these peaks, very fearful times, this is a time to be a buyer. They're often bottoms. There's the rally. Over here again, we have a little peak. Here's a little bottom, little rally. When we see complacency over here, when others are complacent, we want to be fearful. And here's the market selling off. So the VIX does have an inverse relationship. If I can maybe zoom out a little bit more for you, you can see that inverse relationship with the market. So this huge spike today really told us that we're going to see a rally, and that's why I wrote in the market letter, fear is in the air. The VIX hit levels not seen since 2002. This is a time to be looking at least at being a short-term buyer. The market will rally, and that's what we saw today at the close. Let me pull up the Dow one more time. We'll use the Dow 30, and here's the Dow. And let me get rid of this. We'll look at an intraday chart. You can see really around 3 o'clock the market just absolutely took off, and one of the reasons, or one of the main reasons that the market took off was the government proposed a trust fund, basically, that would take illiquid assets off the balance sheet of a lot of these financial companies. So we have, I'm not an expert on this, but you have tier 1, tier 2, and level 3, tier 3 assets. Tier 1 is mark to market, so whatever the price is, that's what they have to mark the asset at. Tier 2 is mark to model, where they have financial models, and they can say, well, we think that such and such asset is going to be at this point in a certain amount of time, and that's the model. So mark to model. Tier 3 assets basically just have no liquidity, meaning there's no market to sell them, there's no market to buy them. So when you have assets like this, and we've seen a lot of these in the CDOs and the mortgage-backed securities, there's nothing you can do with them. You can't price them because there's no market for them. And these are on the balance sheets of a lot of these companies, and it's what's killing these companies. So the government proposed a trust fund that would take these assets off the balance sheet of these companies, and it would basically absolve them of a huge problem. And about the time that that was proposed, over here within about the last hour, we saw the market, this is the Dow, just really take off. And let's see, we have 100, 200, 300, almost 400 points in the last hour.